So on behalf of Equalify and all our cohort partners, first of all, I would like to welcome you all. My name is Aditya Gadge. I'm the founder and CEO of Equalify. We were earlier called as AIWMI. We've recently gone through a brand change. So don't get confused. The idea behind this entire initiative was very simple, and I'll put that context for the next couple of minutes. Equalify, or earlier AIWMI, we've been working on alternative investment education since 2013. Having done a lot of work in terms of conferences, education programs, advocacy work with the regulators, creating an AIF association, working closely with an ISM, working with the industry on various investor education initiatives. We've tried coming up with different initiatives which brought more focus to the alternative investment sector, which helped the alternative investment sector get enhance its professional standards, and which also helped the investors get better awareness about this asset class. Thanks to this work that we've been doing, SEBI acknowledged us a couple of years ago, and I was invited to be a part of the IPAC committee also for the last tenure. On the committee, it was a very interesting experience for me as an educationist. I've never run an AIF, or I've never been into wealth or asset management myself, always been on the education side. But it was an interesting experience to be at the center of regulators, investors, and the industry, and to see how all of them are, while working towards the same common goal, but are kind of inconveniencing each other in some way or other. So our regulators, one of the best regulators in the world, one of the most forward-looking regulators, I must say, have been doing a lot of work in simplifying the regulations on AIF, or making it them more, I would say, more in the interest of the clients. But this part has also inconvenienced a lot of the compliance professionals or the fund managers who run AIFs. For me, it was an interesting 1.5 years of journey, watching both of these sets of people, trying to achieve the same objective, but sometimes going, being at the crossroads. So when this entire thought of coming up with this cohort, the idea was, there are a lot of fund managers, a lot of professionals who've been approaching us over the last few years, requesting us for connects with the right service providers. Running an AIF is becoming, it's becoming a very well-regulated industry, which means it's also giving rise to a very important, a big need for the right partners for AIF investment managers to set up and run the AIF. And we've been getting several requests as a neutral industry body from different fund managers, different groups, about for introducing them to the right trustees, lawyers, custodians, etc. So this thought came up during our discussion with some of the industry participants, that why can't we set up a more structured learning program where all those companies or individuals who are planning to set up an AIF can get this hand-holding in a very systematic way, instead of in a very ad hoc way. So we started working on this concept, and we were lucky to have some right minds and organizations who immediately lapped up to this idea, and they were happy to support it, both in terms of their intellectual capital as well as time. And here we are, on our first day of this first ever cohort that we have set up. If my research is right, there's never been such a cohort anywhere in the world, forget India. So that way, it's a first of its kind, and I congratulate all of you, the participants, as well as our partners, to be a part of this historical process. We've got a good group of cohort partners here. I'm going to quickly come to them. We've selected them on the basis of the roles the service providers play in helping set up an AIF and managing an AIF. And the idea behind this cohort is to help all of you participants with the right advice over the next 15 days, and hopefully get you the right, if you are planning to set up an AI for the in the short term, hopefully get you some good pricing advantage by being a part of this cohort. So this is the basic objective. We've got a good group of about 100 plus participants. The structure of this program is over the next 15 days, we are going to run this program on an online mode. You all have received the schedule already. Today is just an informal introductory session. From tomorrow, we start with the actual sector-wise, segment-wise sessions for each one of you, where each of our cohort partners are going to take you through what roles their categories play, and how you can get to know what is right, what is wrong, do's and don'ts, how to avoid any pitfalls, etc. So we on this note, I think I would like to invite all our cohort partners to please put on the videos. I'll quickly go ahead and invite all of you to introduce yourselves. The first and foremost is Edelweiss Wealth Management, which is our custodian partner for the cohort, as well as our presenting partner for this entire initiative. Thank you, Edelweiss team. You were the first guys. Of course, this entire thing came up over a chai pe charcha, and I'm so happy that this has really shaped up very well for all, all the market participants. So Edelweiss team, Udit, Anand, if you can just unmute yourselves and quickly introduce yourselves, please.
Yeah, hi. Aditya, am I audible?
Yes, you are.
Yeah, Aditya, thank you so much for this introduction, and a warm welcome to all the participants and all the cohort partners. Quickly, we at Edelweiss Asset Services are part of Edelweiss Wealth Management entity, and we offer the custodial services to all the funds, whether it be it's AIFs, mutual fund, insurance, PMS, with the best of the systems in place, having the best in place world-class systems for processing the transactions. Over a period of years, we have onboarded close to around over 200 clients, and we are adding day by day, adding clients with the services which we provide. At present, we would have a AUC of over $5 billion. That's it from my side, Aditya. Udit, you'd like to add on to this?
Hi, this is Udit. I handle products for our asset services business at Edelweiss. Edelweiss Wealth Management overall is part of business from Edelweiss Financial Services Group, which has now been acquired by PAG. It's a large private equity fund based out of Hong Kong, and they manage close to about $40 billion in assets. Just to give a brief about Edelweiss Wealth Management, the business basically looks at capital light advisory fee-based businesses. So institutional equities, investment banking, wealth management, and asset services are the primary business of the group. And just as an update, we would soon be getting this demerged from the Edelweiss overall group, and this is a separate entity within a period of about a year. So that's it from
Thank you, Udit. I'll quickly move on to our next partner for the category professional services. I'd like to invite Rajesh Gandhi, partner Deloitte, to quickly come and introduce himself and the company.
Yeah, Aditya, thank you very much, and congratulations to you. As you said, it's a historic moment. The first time somebody is doing like this in the world, not just in India. So that's great to know, and great to know that we are part of this initiative. And congratulations to all my cohort partners as well. So my name is Rajesh, and I'm a tax partner with Deloitte in India. Been with Deloitte for over 24, 25 years, including having spent 3 years in our US office. I specialize in financial services, and particularly on the fund side, I lead the asset management tax for Deloitte in India, and also the US-India corridor. So focusing on SPIs, AIFs, and NBFCs. And this AIF journey has been pretty interesting for us in the last 5-6 years in particular, in working with Aditya. And I also have my team members with me, 2 of my AIF specialists. Vijay Morarka and Hardik Mehta. So look forward to working with all of you and trying to ease out the wrinkles as you navigate the process of setting up and operating your AIFs. I'll just mention one quick thing. We do provide end-to-end services in relation to AIF. So as far as setup and operations are concerned, both in the terms of fund documentation, regulatory approvals, other kinds of registrations, both on an ongoing and setup basis. So look forward to working together.
Thank you, Rajesh. May I quickly call upon Mr. Girish Shankar from CAMS. Girish, I hope you're here.
Yeah.
Yeah.
Am I audible?
Super. Over to you.
Yeah, thank you. I'm audible, right, Aditya?
Yes, you are.
Yeah, so thanks, Aditya, for this. I think there was never a better time to have this cohort, given the way the industry is growing, and we're seeing a lot of fund managers launching on their own. Briefly about myself, I head the AIF and the business head for the AIF vertical at CAMS, the AIF services vertical. Interestingly, we have been servicing this industry even before the term AIF came in. We have been catering to private equity VC funds since 2007. So safe to say, we have seen how this industry has been conceptualized, grown, exponentially grown now, etc., and being able to be a part of this. Today, we have a large set of clients, like from people who have less than 100 crores of AUM, who are the new startups and new startup fund managers, to say so, as well as the large ones which have in excess of 5,000, 6,000 crores of AUM. Overall, I think our assets under administration, management, etc., is around more than 1 lakh crore, 1.4 lakh crore among the various funds, AIF funds which we handle. CAMS, of course, needs no introduction, I presume. We have been leading RTA agent in the mutual fund space. With that, and given now with the regulatory, you would have noticed that a lot more regulations which are coming in, trying to standardize practices and trying to do some, take some parallel how mutual funds, the industry has evolved over time, and we are seeing a lot of regulations. And in fact, Ms. Madhuri Buch, who was earlier the APAC, had mentioned in one of the committees, we want this to evolve like the AMFI, IAF to be the kind of AMFI for mutual funds and bring about standardization. So happy to be a part of this. Looking forward to a session next week. Would be happy to give any insights on what an RTA does. Today we do the full stack of services, but specifically we started with RTA and have grown both on the liability and the asset side in our service stack, including the digital. We have also been pretty active on the digital side. Excited about this, happy to walk you through, clarify anything we have. I'll also have my team participating in the session to handle any very specific queries you may have in the onboarding stage. Thanks, Aditya, back to you.
Thank you so much, Girish. Quickly moving on to our merchant banking partner, Anurag. Can I request you to please unmute yourself and introduce?
Hi, Aditya. Thanks for conducting this first kind of initiative, and we are glad to be part of this knowledge sharing thing. So just brief you about Keynote. Keynote is a full service investment bank offering integrated financial services. We started in 1993 with the professionals and took the license of merchant banking. Over a period of 28 years plus, we have done more than 500 transactions, 400 due diligence certificates in merchant banking, including IPOs, right issue, takeovers, AIFs, and open offers, takeovers, others. So we have a very qualified senior team of professionals supported by another team which has a relevant experience in various merchant banking activities. In AIF, we are very much proactively working with all the AIFs in the market. As of now, we are working with 50 plus AIFs and providing services in the entire value chain of the funds lifecycle, starting from registration till the investing in the portfolio companies, exiting, M&A, valuations and everything. So we have Mr. Uday Patil and Ms. Radha Kirtivasan, part of our team as part of this cohort. And we are willing to share knowledge as much as possible and answer all your other queries during over a period of this cohort. Thank you.
Thank you, Anurag. Quickly moving on to Alok Sasmal from FinIQ. Alok, request you to please unmute.
Sure. Yeah. Thank you, Aditya, for taking this wonderful initiative. In fact, this is really path-breaking when the AIF industry or the wealth management industry is evolving from every angle. This is a good initiative, rather, to bringing all the ecosystem player and the prospective AI player in the market to create a level playing field. Also, exchange the knowledge so that as an industry, we start implementing the best practice so that this industry evolve from every angle. So quickly, just to give a big background of FinIQ. So FinIQ is a out and out technology company, financial technology company started back in 2001 in Singapore. So in last 20 years, we have become the largest structured product platform provider globally. So just to give you a brief background. So we back in 2001, we realized structured product is one of such product as today we are speaking like AIF in Asian market, which was one of the preferred product for all large private banks, right from all top 40, 50 banks, right from UBS, Citi, Merrill Lynch of the world. At that time, they also faced the similar kind of challenges to distribute this kind of complex product to their high-end client, along with the right platform or right compliance, what every regulator wanted as one of the priority. And that's how over the last 20 years, it evolved. Today, we serve to top 60 banks globally. And all the banks today in Asian market, European market, they are using our platform either as a buy side or sell side. Today, if any large name you say, they are all client of ours. So we started our India operation last year with a similar intention to provide the similar kind of platform to any product which are OTC in nature. So we realized AIF is one of such product which does not have any right open architecture. And because of that, although there are 900 plus AIF in the market, they don't get level playing platform to reach out to their targeted distributor in the market. Although there are almost including IFA, RIA, bank, private wealth put together are more than 1 lakh distributor entities in the market. But for a AIF who are practically a thin team, reaching out to this last set of distributor is a big challenge. So we want to solve this big problem through technology, replicating the similar platform what we created for structured product globally. Today, as we speak, we do an annual turnover of more than 60 billion or practically 70 billion last year. Transaction has happened through our platform across Asian market, European market, and US market. So we look forward to a similar kind of market evolving, especially for AIF, all three AIF put together. Along with that, there are micro challenges for Cat 3 AIF, there are liquidity problem, or Cat 2 debt AIF, there are a problem of market making. So all these micro challenges also would be solving through our platform. Looking forward to interact with you how this kind of platform may solve you to reach out to your right set of distributor, solving this kind of micro problem going forward. Looking forward to interact with you individually or as a group. And congratulations to my other Cohort partner. Hopefully we'll be working with them hand in hand so that we collectively can create the right platform for regulator to also be more cognizant to what are the platform we are providing. These are more compliant as per the expectation from the regulator. Thank you.
Thanks, Alok. Before I move on to our next cohort partner, Ashwin and Aparna, we have two guest speakers from two of the large fund houses here. I'll just request to bear with us for another 5-7 minutes. We'll quickly finish off the introductions and then we are coming straight to you.
Sure,
so
sure.
Ashwin and Aparna, I hope is perfect.
All right.
Yeah, all right.
Yeah, sure.
So guys, okay, moving on to our next cohort partner, I'd like to invite Aditya Sesh from Basis Fund Accounting. Aditya, could you please unmute yourself and quickly take us through what your company does?
Yes.
Aditya, thank you so much for this initiative. It's a wonderful initiative. As you rightly said, it's a unique initiative, not just here, but across the world. The only far comparison I can think is Marcus events, which is so generic in nature, and this is so specific. So that tells you that you have created a new category in this entire space. Congratulations to all the participants who have come here, the service providers. It is the service partner network that make this industry what it is. And congratulations to them that they saw what was coming and set up their services. A little about basis. We service in excess of $100 billion across the globe in fund administration, fund accounting, financial reporting, trustee services, legal tech services, and software products. In fact, we have a software product that automates contracts and agreements. Our experience in fund administration globally and India ranges from general hedge funds, all kinds of private equity funds, mezzanine funds. We have been associated with various regulatory bodies across the world, including GIFT in IFSC from 2019. And in fact, in one of my interviews day before yesterday, I said that today's regulators and governments are far more sensitive and proactive to participant needs, whether it be service providers or the market participants itself. And that is amply displayed in what IFSC has done and SEBI is turning out to be, and the entire government itself. In India also, we are in the fund administration and the rest of the business, legal tech, US tax, India tax. In fact, I'm a US tax practitioner specializing in the fund arena, more on the execution side. So we have a wide spectrum of services just to take care of client requirements. We are spread across 8 locations around the globe. That's pretty much us. Thank you so much, Aditya.
Thank you, Aditya. Moving on to our next partner for the trustee category, Mr. Tariq Abu Baker from Amicorp. Tariq, can I please request you?
Good evening, everyone. Aditya, again, thank you so much for having us on this platform. We really look forward to working with each one over here. Just to give a quick background, Amicorp as a group, we've been into existence in 92. We've got 40 offices across the globe, to be precise, 28 countries. Internationally, we're very strong in terms of setting up companies overseas, managing these companies in capacity of director, nominee shareholder. Similarly, we're a licensed trust company internationally and among the top 5 globally. Plus, we're also instrumental in setting up funds internationally. We've done over 300 plus funds, where we are pure fund administrators. So the NAV calculations, the reportings, all of this is done by us on the international side. Learning from our international practices, we got equally excited when the fund business took off in India. In India, we've been there since 2005 in different domains. 2011 to 2006, we were pure. 2011 to 6 years from there, we were purely under the family trust space for many years. That's when the AIF business started, and since then we've been quite aggressively promoting AIFs for our domestic clients, where we act as trustees and do a lot of fund administration and compliance work under that. So we do the entire end-to-end trusteeship for close to 120 AIFs as of now, and we also do a lot of fund compliance and fund administration work along with fund accounting. We've also been instrumental in GIFT City. We've got 2 setups in GIFT City. One is Amicorp Trustee Services and one is the Amicorp Fund Compliance Services. So we've got 2 licensed entities out of GIFT City. And be happy to participate and add value to whatever little bit we can to the larger interest of the group.
Thank you, Tariq. Quickly moving on to K FinTech. Senthil, K FinTech is one of our fund accounting partners, cohort partners for this group. Senthil, you there?
Yeah, good evening, Aditya.
Hi,
It's
good evening.
fantastic to see wide range participation. And first of all, thanks, Aditya, for this brilliant initiative. And I can see like a huge number of participants. So without taking much time, I'll just give you a brief introduction about what K FinTech does. We are a 30-year+ old company. So we service multiple lines of businesses, starting from asset management, corporate registry, PMS, AIF. So in this forum, like I'll confine my line of discussion only to the alternate investment funds. For alternate investment funds, like we provide multiple services, and we are a fund accounting cohort partner here. So just to talk more on the fund accounting, our capabilities. So we service fund accounting services for large asset management companies, alternatives, both in domestic markets as well as international markets, more specific to Southeast Asian markets. So it may be in the form of platform services or through a managed service layer. So in India, close to about 300+ funds are being serviced by us on both fund accounting and other services. So on the fund accounting platform, we will dwell during the course of time on more details. Just to give you a high level, so we are our fund accounting platform is a multi-asset class, multi-geography, and multi-currency asset class, and we are setting up a large facility in GIFT. So it will be a close to about a 400-500 seater facility coming up in GIFT. So all our international business operations will be moved to GIFT. So this is just brief introduction about us. Like more we can cover during the subsequent sessions.
We've got, I believe, 2 more partners to go. I'll request both Prakash and Jayesh from Centlon and Ascent respectively to keep the introduction quick. I think one of our guest speakers have to leave by 5:45. So Prakash, quickly moving on to you, if you could take us, have a quick introduction of Finet.
Yeah. Thanks, Aditya, and thanks for setting up this unique initiative. I represent Centlon, and Finet is a flagship platform which we have built over the past couple of years for specifically for Cat 1 and Cat 2 AIF. What we observed a few years back when we were talking to a few of our friends in the industry was that a lot of new funds that get set up initial few years use spreadsheets widely for managing their investor data as well as the deals that they work on, so managing the deal pipeline and so forth. And over a period of time, as they grow, they find it difficult to manage this huge volume of data that they have, as well as consolidate it for regulatory reporting and so forth. That's where the concept of Finet came up, and today we have a platform which helps you in terms of managing your investors, managing your deal pipeline, helping you do due diligence while you identify figure out where you want to make investments, as well as monitoring and tracking of your post-investment portfolio. So that's where we are. We'll talk about in detail in terms of why adoption of technology at the early stage of the fund would actually help them in long run, and how Finet can help in this journey. Thanks, Aditya.
Thanks, Prakash. That was really quick. Jayesh, if you are around, if you can quickly introduce us to Ascent Group. Ascent is one of the other fund accounting partners for this cohort.
Aditya, I think he's facing network issues. He just messaged me.
Oh, okay. No. So Jayesh, you can we come back to you. In the meanwhile, participants, we have 2 senior guest speakers from the industry today. First, Mr. Ashwin Patni. He is the head of products and alternates at Axis AMC. And the second speaker is Ms. Aparna Karmase. She's the head of compliance, legal and secretariat at Motilal Oswal AMC. Welcome, Ashwin and Aparna. Ashwin, I believe you have to leave by 5:45. So Rajesh, may I request you to please be a moderator for the next quick Q&A with both Ashwin and Aparna.
Right, no, absolutely. Thanks, and we'll jump right into it. And this is will be a short but I think interesting session with both Ashwin and Aparna. So, I mean, very quickly, I think we know that capital commitment by AIFs is about 6.5 lakh crores, as against about 37 lakh crores of mutual fund AUM, which is, we are close to about 20% now and moving ahead. So I think this is a very interesting time. I would like to ask Ashwin and Aparna, both of you, thanks for spending time and being patient. Is, for our listeners here, first of all, to start with, why do you think someone would decide to set up a AIF in the first place? I think this is meant more for a PMS audience or a PMS investor. Why do you think he should consider setting up a AIF as against being a PMS player? Uh, any one of you, maybe Ashwin, you want to start?
Yeah, so I think you know the short answer is I think there are merits for both vehicles, and for any player who wants to scale up the business and be relevant across multiple strategies for a larger spectrum of investors, then I think it's not an either or situation, but actually a situation where you probably have to budget for both. PMS is very well suited for the more traditional long only cash equity kind of portfolios, whereas AIF works really well for anything that has any amount of tweak in it. It could be hedging strategies, it could be on account of use of derivatives, on account of use of options trade strategies, and typically these things work far better in AIF, even within. I'm staying within listed equities as a scope. So I think there are certain strategies which work well in one, certain strategies which work better in the other. But like I said, the short answer is that for a fund manager who has aspirations to be a bigger platform to cater to a larger number of investors, then I think having both makes sense. Perhaps you could sequence it maybe over a period of time instead of sort of trying to fight all the battles at once. But yes, it makes a lot of sense to have both.
Yeah, understood. Thank you for that, Ashwin. Aparna, any thoughts from your side on this?
Yeah, I mean, just to add what Ashwin has said, like depends upon what the person would like to offer to its investors. So basically, if they are offering more of a listed space or securities only, in that case, they can definitely consider the PMS for this matters, because the managing PMS, the cost is comparatively low as compared to AIF. But if they want to go with the derivative strategies and leverage on the portfolio, then in that case, the AIF would be the better options. And there you have a more of liberal regulations which permits that. So that's the one thing. And secondly, they can definitely go step by step. Like, since PMS require capital commitment is as compared to AIF is very less. It depends upon AUM as far as AIF is concerned, whereas in PMS, it's just a 2 CR is what minimum amount is required. So in that, and the requirement of the people management and all those issues. So from that perspective, PMS would be good to start with, but of course, it depends upon the strategies which they would like to offer, and then suitably they can choose to go with the AIF in that case.
Right, Aparna, thank you, and fully agree with both of you all on that. My next question is, for a new fund manager, what are some of the key considerations one should look at while setting up their own fund? For example, what were there any challenges you faced while setting up an AIF, and what are some of the pitfalls which new applicants should note of? So maybe again, Ashwin, do you want to start?
Yeah, so I think what people need to be sensitive about is that when you're setting up a new manager, is that essentially you have to make sure that you cover for all the entire process. What happens, I think, I mean, just to answer it in a contra way, what typically ends up happening is that people think that they have a good strategy, which investors would like, they like to pull investors in. But what they have to think through is the entire, when you have to create it as a formal fund manager, then you have to make sure that the entire structure and the platform is created in a particular way. So it's about making sure that you have the systems, the processes, the all the different functions. And these days SEBI has been quite prescriptive actually about, the need for not just, the fund managers, but also a host of other skill sets that any fund manager, aspiring portfolio manager needs to have in place before they can even start their business. And therefore, I think these things people should understand pretty well. And I think it's also about making sure that they have the ability to create certain standardized systems, processes, etc., which they can execute on an ongoing basis as they start onboarding clients. Because like I said, again, it's one thing to think that you have a good investment strategy, but when you start dealing with other people's money and client money, then a lot of investor, process systems become very critical to have.
Right, absolutely. Aparna, you want to share thoughts on this, please?
Yeah, meaning in terms of structuring at the start of any particular position. So they first need to understand their own investment strategy, and they can decide whether they would like to go ahead with the trust structure or the LLP structure. Then they have to see the taxation issues around it, which is the more preferential for them, considering their investment strategy again. Of course, in case of LLP, it looks like there is very limited compliance matters or the cost effective, but there are certain chances, like, you have to fill the form of beneficiaries every time whenever the new investors are coming in, and every drawdown which you are doing. So in that case, there is compliances cost is going up in that case. And additionally, the data would be available on the MCA portal. So list of beneficiaries would be all in the public in terms of LLP. Whereas in case of trust, if we form that is a determinant trust, and then we have the proper registration, in that case, we have more benefits in terms of the tax structure as well as the clarity from the taxation issues. I think you are the best person to give further inputs on this. So that is one of the important point which they can consider. Further, they can also see about again strategy, like they would like to go with the listed or unlisted stocks. Then suitably they or maybe real estate or any specific commodities and others matters. They can decide suitably to go with the close-ended structure or open-ended structures, and to see their benefits. Like if it is a listed securities, they can go ahead with probably with both the structures. But if it is unlisted, then they can go ahead with probably with the close-ended structures, and preferably because there are a lot of other issues will also be taken care of in case of close-ended, because there would be a determinant A. And then in terms of the disposal of the assets and the risk related to unlisted space, that can be taken care of better in the close-ended structure. So all those points they need to consider, first of all, to go with the Cat 1, Cat 2 or Cat 3 AIF, and then to decide what kind of structure in terms of trust or LLP, then need to decide about the open-ended and close-ended structures. So all those aspects they need to take into consideration.
I think both of you have given a lot of food for thought to our audience on this question, and we'll try and cover as much as we can on this tomorrow. But moving forward, my next question, again, maybe Ashwin, you could start as, so, I mean, as I said, we reached about almost 20%, and we know where we are on Cat 1, Cat 2, Cat 3. Where do you see the future of AIFs maybe in the next 3 to 5 years, considering the current regulations, the current environment, and particularly maybe even on tech? Do you see tech playing a more important role for AIFs?
So if I think from a industry perspective, I think we are in a little bit of a sweet spot. I think pretty much all engines are firing. If you look at broad strategies across equity, all asset classes, with equity, fixed income, real estate, special situations, infrastructure, you pretty much have all the bases covered across existing players. And we have new players looking to come in. It's a very vibrant segment today, and we've seen a lot of, in fact, last 3 to 5 years, I've seen a lot of new players come in as well. A lot of innovation in terms of new products. So I think we're in a sweet spot. Of course, markets will keep surprising us in terms of turmoils and ups and downs, but on a medium term, 3 to 5 years landscape, I think my sense is that we will have a situation where we'll have increasingly large participation from domestic investors into AIFs. I think traditionally they've been dominated, and the AUMs that you mentioned as well, a lot of that gets dominated by the large global investors historically, but we are seeing this massive shift where domestic investors are becoming key. And also, I think there's a lot of innovation as investors get their head around how they can use this their participation into an AIF, and how they could partner with fund managers, etc., for certain strategic objectives as well. So I feel it's less about new ideas, of course, that will keep happening, but more about broadening the investor participation, and also innovation around services and investor, what the service offering itself, core service offering to investors, especially I think the larger investors and the family offices, etc. On tech, I think it is ripe for disruption. I think we are operating on some pretty old tech in this business so far, and I think we are seeing already some of the service providers, some of them are already present here, trying to do things around that, and I think it's high time we had better quality tech in this business. So I'm quite hopeful with a 2, 3 year, 5 year vision that we'll see a massive tech transformation as well.
Both on the fund management and distribution side, or you think one would precede, more priority over the other on the tech?
I think both. We've already seen some solution for the latter in terms of how can we digitize the entire onboarding process and the customer management process. I think there has been some reasonable sort of strides made there in the last few years. More can be done. But I think on the fund management side, I think we're still quite behind the curve, and that is where I want to see a lot more happening. And I think that's where I'm quite confident that we will see a lot more happening.
Do you have time for one more question before we go to Aparna? I know.
Yeah, sure.
Okay. Maybe one last question for you, and then we'll let you go. Is some of the panelists here or some of the intermediaries spoke about the gift city, and pretty impressive in what they're trying to do in the gift city. To your mind, what do you see the role of gift city as far as AIFs are concerned, and what kind of fund managers you think might find gift city attractive?
I'm very excited. Just short answer is that Axis is opening a branch as well, and it's I think the vision for that is massive. And you can see it building out year on year in terms of how it's taking shape. Of course, it's still very early days in its trajectory, but I believe that AIF will be a core part of why fund managers would go to Gift City. We've recently looked at the IFSC coming up with a unified guidelines in terms of a common fund manager license. That's a massive game changer as well. So I think Gift City, the original intent, and currently even now, I think the big part of it is about becoming a way for global investors to come into the Indian asset class, but I think it can equally serve the other side of it as well, which is allowing Indian investors to access global asset classes. And that's the power of that offering, which is that it can serve very well both flows over a period of time. Of course, in the near term, of course, it's the inflows, incoming flows that we will all be solving for. So very exciting. I think you're seeing an increasingly large number of asset managers going there. I think the space will be dominated by the Indian players. I'm not sure how many of the global players would choose to sort of come in there. I mean, still early days. Let's see what happens there. But definitely, I think within the Indian managers, I think there will be a lot of them just talking around, and including us. I think there is a clear plan to get there quickly.
Sounds interesting, Ashwin. Thank you. I'm sure the PM would be happy to hear what you're saying, because that's a SPED project. We'll let you go with that, and I would like to continue with Aparna maybe for one or two more questions.
Yeah, sure. Thank you, and apologies, Aditya and everyone, and just had another meeting, so I'll drop off. But a great initiative, and really look forward to all of you guys having benefiting from the interactions over the next.
Thank you so much, Ashwin.
Bye.
Good day.
Thank you. So maybe Aparna, before we close and I hand it back to Aditya, I'll continue and get your thoughts on the GIFT City as well. I mean, how do you see the GIFT City playing a role, maybe in your organization or even generally for AIFs? And which kind of players would be interested in the GIFT City?
Sure. So GIFT City is really, as you already mentioned, it's a massive change for the entire industry. Because at Motilal Oswal also, we as a group entity, we are already created one broker-dealer license at GIFT City, as well as one AIF. Cat 2 AIF is already set and it started operations from the GIFT City. So it is giving a multiple options to you that you can create a feeder fund structure, the master feeder structure, which we used to play around is across globe. So now we can have those similar structures at GIFT City, and which is really helping us a lot in that case. And it is giving a totally different business strategy for each of the fund house. So that is the one aspect which we can definitely consider. And secondly, there are so many options available in terms like you can have direct overseas investment through LRS route or through GIFT City for your investors. Then you can have the options of investing in India or through AIF GIFT City. You might invest in overseas mutual funds or fund UCITS structures outside India through GIFT City, or you can also invest or create your investments which you can invest in Indian AIFs. So there are so many doors have been opened through GIFT City, and GIFT City officials also we found very cooperative and innovative in their thoughts. So they are also very cooperative in terms of and free mind to accept the new suggestions and to speed up the processes. So it is amazing experience with the GIFT City people. They are very fast in their response. So it is really helping us to create the structures and go on with the starting operations at GIFT City. So that's really very good experience, and I see that many people, players would like to be in a GIFT City now going forward. Of course, tax benefit is there, but apart from that, as a Indian players, it is a new ground has been opened up. So that's really interesting space.
Thank you, Aparna, and couldn't agree more with you on that. My last question to you is, in terms of all the compliance requirements for an AIF, especially on an ongoing basis, what would you expect from the government in terms of ease of doing business? What are the one or two key areas where you think compliance requirements should be simplified?
From government perspective, what you can see is they can definitely improvise as far as the Indian related to SEBI matters are concerned. They can improvise on the time standards. So the time taken for approvals are still another 3 months time. So where we can definitely improvise on the SEBI side and the government side on that part. And secondly, from the regulations perspective, even I also got to know from the industry players now they are going more aligned that with the MF industry. But that thought we need to relook into it, how much they would like to align that with the mutual funds, because ultimately AIF is the alternative funds, and the current the flexibility provided in the regulations. How much that needs to be touched upon, that is the point which we really need to think through. That what is they need to understand the difference between both the products and the requirement and the type of the investors which we are catering to, and accordingly steps should be developed going forward on this matter.
Right. No, absolutely, completely agree with you. And the world over as well, you see clearly a lot of distinction between regulations for UCITS and AIFs, especially considering the profile of the investors and how sophisticated they are. So thank you very much, Aparna, for your insights, and Ashwin as well. And with that, I'll hand it back to Aditya.
Thank you very much.
Thanks, Aparna, and thank you so much, Rajesh, for moderating this so efficiently. So audience, that's about it now. Quickly, time for some questions. If you all have any questions, feel free to put it up in the chat window. I'll quickly take you through the format. I'm sure the team has already informed you, but just to reiterate, From today was just an informal introduction session with the partners, as well as some small Q&A. We start with our actual sessions from tomorrow, and this entire online part of this cohort will continue till 30th of June. From July onward, after the online sessions are over, our team will get in touch with you to understand. I mean, if you want to set up meetings with this cohort partners, we'll be happy to do that for you. If most of the participants are happy to come to a common forum or gathering, we are happy to organize that as well in Mumbai, sometime as per convenience of all the partners. So this call will take after the online sessions are over on June 30th, and on the basis of your feedback. In the meanwhile, from tomorrow onwards, each partner will be conducting a session on the specific category, partnership category class, where they'll be taking you through what is the role of that particular category partner, the do's and don'ts, what are things you need to take care of while structuring your own AIF, etc. Someone just messaged on the chat window about the contact details of the partners and all. Yes, of course. You will be receiving a cohort booklet early next week, which will have all the details of what each of this partnership categories, what kind of value they bring to the table for you, as well as it will have the contact details of all the partners. You're of course also free, all of you free to connect with our partners on LinkedIn or through any other social media forums. I'm sure our partners will be more than happy to get in touch with you. We will refrain from creating a WhatsApp group because there are a lot of participants here who would want to not be a part of a general public forum. So we'll avoid creating a WhatsApp group. We usually do that for our education programs, but the nature of this cohort is such that we'll have to avoid that. I'm checking your questions now. So there's one suggestion from Charmi, and this is for partners going forward, if we can use a mix of Hindi and English, I think that will be better. Cohort partner list and all, we'll circulate this earlier next week. Okay, there are some technical questions. I'm not the right person to answer those, and I don't think we should take up the technical questions. If you have any questions related to the cohort, the program format, partners, please ask us, because all these technical questions you can take up with during the sessions starting tomorrow.
So one on video recording, Aditya.
So yes, the video recordings, we are recording all the sessions and we'll be uploading them on a common platform and sharing the link with all of you after the sessions are over. Again, I see a question, a technical question from Rama. Rama, I'll skip it for today. Please take it up with the respective partners. Naveen is asking, is there a partner who can help in fundraise? Yes, we have a Edelweiss Wealth Management. I'm sure they'll be happy to look into that. But you can, Naveen, feel free to connect with us separately. Happy to connect you to other wealth partners or distribution partners in the business. It would be great to get an exhaustive directory of all ecosystem players. So that's exactly what we are trying to prepare. And I think we've got the best of the best names as our cohort partners. So I'm sure you'll not need to look beyond these names once it's started. So just wait for this directory. It will come to you early next week. So great. I don't see any other suggestions or questions. We all look forward to see you from tomorrow onwards. Thank you, partners, for joining in today. And thank you, applicants. Let's make it a big success for all of us. And on that note, I'll wind up. Have a great day. Stay safe.
Thank you. Thank you, Aditya.
Thank you.
Thank you.
Thank you.
Thanks, Aditya. Thanks, everybody.
Thanks, everyone.
Thank you.